Hey everyone, welcome back to Corporate Decoder, the place where we decode corporate filings so you don't have to. Today, we're diving into Douglas Dynamics proxy statement. Will there be any boardroom drama or executive compensation controversies? Let's find out. We're looking into who's up for election, how much the executives are getting paid, and if the auditors are still on the payroll. Douglas Dynamics Inc., a Delaware corporation, is a company that makes and sells commercial snow and ice control equipment. Think Snowplows. They have a 2025 annual meeting coming up, so they've released this proxy statement, which is like a voter's guide for shareholders. First up, the election of directors. 3 people are nominated for election to the board to hold office until 2028. Margaret Dunn, Donald Sturdivant, and Mark Van Genderen. The election of directors is pretty straightforward. The people who get the most votes win, meaning any shares not voted do not contribute to the election. Margaret Dano, 65, has been a director since 2012. She's got a lot of leadership experience at publicly traded manufacturing companies. Donald Sturdivant, 64, has been a director since 2010. He is an operating partner with Tra LLC, a private equity firm. Mark Van Genderen, 56, has been serving as president and CEO and as a director since March 2025. He's been with the company in different roles since 2020. Now let's look at who owns the most stock. This is important because it tells us who has the most influence over the company. We see that Conestoga Capital Advisors, LLC, and Allspring Global Investments Holdings, LLC, own over 10% of the company's stock. BlackRock Inc. and Zenar Investment Management, LLC, also holds significant positions. Next, stock ownership of executive officers and directors. Robert McCormick, the former president, owned 226,490 shares at his retirement. James Janik, the chairman, owned 117 and also owned significant amounts. All current directors and executive officers as a group own around 2% of the company. Let's talk about executive pay. The named executive officers for 2024 included James Janik, the chairman, Robert McCormick, the former CEO, Sarah Lauber, the CFO, Linda Evans, the former chief human resources officer, and Mark Van Gender, who became CEO in March 2025. The shareholders approved the executive compensation with over 97% of the vote, which means people were happy and the compensation committee didn't undertake any big changes. The main parts of the executive compensation package were base salary, annual cash incentives, long-term equity awards, and other benefits like 401k matching. Base salary gives them consistent income. Incentive plan gives opportunity for a bono. Incentive plan gives opportunity for a bono. Incentive plan added EBITDA margin as a third performance share units and time vesting restricted stock units. Robert McCormick was at $750,000. James Janik was at $750,000. Sarah Lauber was at $472, and Knight Van Genderen ended the year at $420,000 after a mid-year promotion. Then comes the annual incentive plan. The performance metrics under the plan were adjusted operating income, free cash flow, and adjusted EBITDA margin weighted 50%, 30%, and 20% respectively. A high weighting shows that the compensation committee believed that any incentive should have a connection to profit. Looking at total bonus paid, Robert McCormick got 100% bonus as percentage of base salary, Sarah Lauber and Linda Evans at 93.5%, and Mark Van Genderen with discretionary reduction 46.8%. The consolidated business actuals were adjusted. This means it excluded sale leaseback transaction proceeds in the amount of $1.1 million. This is to prevent an event like a sale leaseback transaction from affecting their bonus. Equity-based compensation was granted under our 25% plan. Under our long-term incentive program in 2024, we made annual grants of performance share units and time exhausting restricted stock units. In 2024, performance will be measured separately for each of the calendar years during the 2024 performance share units, under which the number of units earned, multiplier share, and return on net assets performance will be increased or decreased by 25% based on our relative 5% of base salary. Ms. Evans and Mr. Van Gen 24. Performance will be measured separately for each of the calendar years during the 2024 performance share units, under which the number of units earned part of 14 restricted 24 performance share units. under which the number of units earned based on earnings per share and return on net assets performance will be increased or decreased by 25% based on our relative TSR performance over the 2024-2000 base salary. Adjusted EPS threshold was $1.36. Target was $1.70 for a 33% earned. The RONA, or return on net assets, threshold was 13.4%. Target at 16.8%, max at 22%. The actual is at 15.8% for a 42.5% earned. Company executive officers and directors must own a certain amount of stocks for 5 years. Chief executive officer must own 3x their base salary. Executive officers must own 2x their base salary, and non-employee directors must own 3x cash of annual retainer. The pay ratio, which measures the difference between the average employee and the CEO compensation, is about 28 to 1. The median employee was at $65,142 a year, compared to the CEO at near $1.8 million. The compensation for non-employee directors has the following. The cash retainer is at $75,000. There's an additional retainer fee of $110,000 in the form of fully vested restricted stock units, and then the chairmen of each committee get additional fees. A non-employee director can make quite a good sum. Also, all directors can get out-of-pocket expenses covered to attend board and committee meetings. Donald Sturdivant takes home around $200K a year with the fees and stock awards. The board wants you to vote for their compensation because they believe their execs are doing a great job, and it's essential for success of the company. Lastly, the Audit Committee selected Deloitte & Touche as their independent registered public accounting firm for 2025. The board recommends voting for Deloitte since they've been doing a great job since 2017. Deloitte made about $1 million in audit fees during 2024. Not bad. In conclusion, the company seems to be in good hands with experienced directors and a solid compensation structure. I think shareholders should be satisfied with the compensation and the direction of the company. The financials appear to be in order, and the board is taking the necessary steps to ensure the company's continued success. Thanks for watching. Don't forget to like, comment, and subscribe for more corporate deep dives. Let us know in the comments what company you'd like us to decode next.